From an era of boundless opportunities and connection, the world is now witnessing a stunning reversal as the forces of opening and globalization retreat. After years of embracing the global stage, nations have started to erect barriers and dismantle trade agreements. In addition, the Western world seems convinced that a seppuku of its economy on the environmental altar is the right way to go. This inexorable shift toward the deglobalization, nationalism, and trade barriers mark a pivotal moment. The world is retreating into fragmented and insular blocs, raising crucial questions about the futures of trade flows. In this video, I'm going to review 3 massive trends that are changing as we speak commodity trading, making commodities less commoditized. And you want to stick to the end of this video because those 3 massive trends are attacking one crucial parameter of any commodity, which may well be an opportunity for smaller trading firms. Without further ado, the crucial characteristic under attack is the commodity fungibility. And just to make sure that we are all on the same page, let's check what fungible means. Being of such nature or kind as to be freely exchangeable or replaceable. Fungibility is crucial in the commodity market because it facilitates exchanges and it ensures an efficient pricing. It allows buyers and sellers to easily exchange these commodities as they do not need to worry about specific origins or individual characteristics, knowing that the commodities can be freely traded and utilized without any significant differences in value. So now that we are clear about the fungibility importance, what are those 3 massive trends? The first one is the ban on specific origin or high tariff, which is basically the same. It pushes trade flows to reorganize itself in block trade, which create massive disruption in the market. For instance, this Bloomberg article speaks about the battle on the LME, where IXM tried to get deliveries of all the non-Russian aluminum of the LME warehouses. Basically, a lot of aluminum buyers cannot accept or don't want to accept aluminum from Russian origin. Therefore, IXM tried to siphon out all the aluminum that were not from Russian origin of the LME warehouses, making them the unique spot sellers of that specific group of end buyers. If we push this trend to its conclusion and there is only Russian metal in the LME warehouses, we can be pretty sure that the LME will lost its importance in terms of price fixing, as it's going to be more and more disconnected from the transacted prices, making the real pricing more obscure and decreasing the aluminum fungibility. What happened on the LME was just a symptom of this new trading block world. And we can be pretty sure that we will see more of them in the coming years. And also, if we think a little bit about where it's going, if there is like several blocks that cannot trade with each other, what do you think is going to happen to all those big trading houses? It will hurt them because it may happen that the government just go to them and say, look guys, you need to choose where you want to be. You cannot play on all the tables. Be careful, choose wisely, because you don't want to trade with enemies. If you've been watching the news recently, you must have seen that there is a big push toward more supply chain transparency. The EU has just come up with a new regulation to make sure that all imported wood products are deforestation free. One day the carbon border adjustment mechanism will be enforced, and basically it seems that if you cannot prove that the commodity is of low carbon production, you will have to pay for it. Here again, if we need to attach to the commodity an extra layer of data, which is going to be used to be taxed, the commodity is de facto losing its fungibility parameters. Technological advancements have enabled greater precision and control in the production and processing of commodities. This could lead to the creation of ingredients and raw materials with unique features and characteristics. Customization is already well implemented in B2C markets. For instance, in the automotive industry, customers can choose various options for their cars. Customization is slowly but surely also catching up in the B2B world. For instance, if you use cocoa in your recipe, you are most likely not going to grind the cocoa beans yourself. You are going to buy directly cocoa powder from one of the top 3 traders, namely Barry Callebaut, Cargill and Olam, to make sure that they are the one right for your recipe. It's a shift from commodity to ingredients. And I know this very, very well because I used to work at the beginning of my career for a company that used to sell cocoa powder in different markets. And I remember we had to spend so much time sampling all the different types of cocoa powder to make sure that this is the right type of powder for that type of utilization, for that type of recipe. I mean, that was a long road to vet one product. But then, when the customer is hooked with your powder, it's extremely unlikely that they are going to shift for a competitor. That's it for me today. I hope that you liked this video and that you learned something. And please let me know in the comment below, what do you think of it? Do you think that those trends is just pure imagination? Or do you think that there is like a change that they will materialize in the real world? So yeah. And also, if you want to break into the great world of commodity trading, please check the first link in the description below. You will land on the Shipping and Commodity Academy. This is my academy, and I'm very proud to say that we have more than 150 students that found a job or that moved to the exciting world of commodity trading because of me. Ciao.